90 for now. But let's move on and get chatting with the management. Shalby is the next stock that we're tracking today. On the back of its Q2 numbers, the company saw a steady performance on a year-over-year basis, but it did see a sequential decline in the margins. We will talk more about that as well. The hospital business occupancy has improved to 49%. So Shanay Shah, who's the president of Shalby, joins us now to discuss more about the performance as well as the outlook. Shanay, good morning and thanks a lot for joining us. This is Pavitra. I want to begin by asking you about the occupancies itself because that stands out as a key positive. It is at 49% now. Where do you see this figure heading, say, by the end of the year?
Good morning and thank you for having me. So, yes, the occupancy levels have grown. We have crossed the 50% level in this quarter for the first time. So, the numbers have panned out well. The biggest positive, I would say, is that, each and every hospital is EBITDA positive as we talk, all the 11 hospitals. And barring two, all of them are between the 15 to 30% kind of range. So, it is a good quarter for us. It has been a good quarter. And from here on, we expect that quarter on quarter, sequentially, we want to see a 5% increase to end the year with an occupancy rate of about 650 to 700 beds.
You want to end the year with an occupancy of?
650 to 700 beds, that will be close to 55 to 60% of occupancy, which in this quarter we were at about 50%.
Got it. So occupancy levels to rise to 55-60% in the next 2 quarters. What about medical tourism? How much did it contribute? What was the growth and any guidance on that?
Sure. So it has been picking up very well for us. It was close to 20 million in this quarter. And we are expecting it to grow significantly as things are opening up, things have opened up, and we are already seeing a large influx of patients. As we talk, we are also in talks with, a hospital in Bangladesh as well as another one in Abu Dhabi at the government level also. And we are trying to understand and explore opportunities of franchisee as well. So that will not only kind of, increase our footprint outside, but also bring in a lot of additional medical tourism into our hospitals.
Hi, Shanay. Morning. How much are you, what is your capex that you have planned going ahead? How many beds are you planning to increase? And in terms of your hospitals in Maharashtra, when will they be operational?
So there are two multi-speciality hospitals that are going to be coming up. One is in Maharashtra, one is in Nashik, which will be operational sometime in the next calendar year, towards the end of next calendar year. And we also have Mumbai, where we are having we've kind of had a deal with the Asha Parekh Institute over there, where we are just waiting for a couple of permissions before we can start the construction. So that is about 2 to 3 years from now, but it's going to be a prime location. Again, it will attract a lot of medical tourism. The other update is that we have recently signed an MOU with a hospital in Jammu. So that is again going to be a multi-speciality 100-bedded hospital that we are going to be operating there. In terms of the capex, we are, Jammu is going to be asset-light model. So is Nashik, but in Nashik we will be investing in medical equipment. So that will be to the tune of about 20-25 crores. Mumbai, we will be expecting a capital outflow of about 150 odd crores.
And when do the Jammu and Nashik ones come on board?
So Jammu will be operational in Q3 or Q4 of this year, and the Nashik hospital will be operational sometime in the next calendar year.
Okay. Once your occupancy reaches 650, 700 beds in the next 2 quarters, what's the kind of operating leverage you will have on the margins? Any guidance on the margins?
Well, if you look at sequentially, the same quarter last year, we were at about 20% margin, which has now expanded to about 24%. So we are already at 24% with these kind of occupancy. And as we kind of, increase the occupancy level from here on, we will definitely see about 35 to 45% EBITDA margin on the incremental revenues. So that is something that can be expected going forward because it will all be operating leverage that will be kicking in for us.
Okay, Shanay, if I can move away from the hospitals and, ask you about the home care business as well, that's done quite well. I mean, compared to last year, you're up around 27%. So what is the outlook here and what is the kind of potential that you see for this part of the business?
The potential is significant. We can easily do about 5 to 7% of the total top line of the hospitals, in the home care business. And it has a lot of indirect benefit because, there's a lot of patient loyalty that gets associated with the home care business because you are treating the patient for each and everything and helping them out for all healthcare needs. And, that also helps, influx into your hospital. So, from that perspective, it is a very important piece for us. And we are continuously working on increasing the scope of services that we provide in the home care business. We are now also exploring how we can provide ICU care at home, among many other things. And the vision is big because we are planning to have more than 100 people over the next 6 months who will be part of the home care team.
Thank you very much.